All right, Wells Fargo downgrading FedEx, citing expectations of lower revenue growth to drive lower valuation. Yeah, good call here, I would say, of course, pretty late by Wells Fargo. The stock has been absolutely obliterated because of a very nasty profit warning a few weeks ago. But a good point. And this is, when you historically see companies cut to try to make an earnings number, when you hear of FedEx saying we're closing 100 hub centers, we're closing places, we're letting people go, that usually will impact your sales. And that will usually mean you may not be able to drive the earnings that you're trying to ultimately serve up to investors.
Well, there's a lot of capital expenditure that they're putting into their entire operation. They're pointing out within this, there's significant operational redesign underway at FedEx. Ultimately, should likely emerge as a less asset-intensive and more efficient service provider, they said in the note. However, that evolution, it's going to take time, measured in years, not quarters, that within the note. And then also, you got to look at freight trends, too. Citi had actually warned about this previously on that front of overall freight trends going into Q4. And they had said, I believe their words were, head to the sidelines on FDX.
I think one of the most interesting quarters this week, if you're sure we have Apple, we have Amazon, it is UPS tomorrow. What do we hear from UPS off of that, really, I would say, bombshell pre-announcement by FedEx, and then ultimately not a very good quarter or conference call for them? So I'd be very concerned about what UPS puts up tomorrow.